Hi and welcome to the Market Alert for Friday, the 21st of April 2023. So US stocks declined in choppy trade again yesterday amid earnings and weak data. So the choppy markets continue at the moment. They'll probably change after the 3rd of May when Powell speaks at the FOMC meeting with regards to whether he's going to raise rates by 0.25%, but we'll just have to wait for that. Sentiment wanes, with the Nasdaq's weighted on by Tesla, so Tesla down as claims tick higher. Philly Fed falls that was released yesterday afternoon as well. Today's economic news, it's we've got he's already spoken. Fed member Harker has already spoken. 7 a.m. we've got UK retail sales. And then we're into all of the flash news for the remainder of the day from what I can actually see. So more inflationary news out for the rest of the day from 8:15 a.m. starting off in Europe. Let's have a look at yesterday's choppy session. We'll kick off with the Dow. And in the Dow, we can see that it continued to actually move lower, heading towards the 20-bar moving average there. And also down on the overnight. We're now below the 5-bar moving average in the daily chart of the Dow. So a bit of a pullback going on here. And if you wanted to just draw in some of these swings, where the lines automatically denote these swings, we can see that we're heading down towards an 89% retracement area in the daily chart there. So I think we've actually just come down and hit it. Let me just expand this out a bit for you and move it over to the left, and there we can see. So yeah, we're close to that 89. So watch this area here, 33,640. Make that 33,650 the psychological line as well. If we break this, then we're likely to test the recent low to the left there as well, which is 33,579. 30-minute chart, you can see the choppiness of the market. Yesterday morning in the pre-market for the Dow, the market following the European markets lower down to the S2 and the psychological level there of 33,700. Market then putting in a 100% reversal, rallied up 50 points, and then we had the kickoff of the Dow, which took out all of the stops that were short. Anybody who'd gone long here, generally put your stop below these sort of lows, take the stops out and move the market back up 150 points to the DP, where the market stopped for the second time on the upside, which is where it had a problem earlier on in the day. The first leg up stopped at the close and then came back down to the S1 and then got back above the low. Again, all predictable in the areas that they want to bring these markets back to. However, once becoming overbought, the markets then slammed back down to the S2, where if you actually measure up here, from this low up to here, you will see the market coming back to just below 89 with demand to bring the market back. And that's precisely what happened, bringing it back to the low. So even despite the fact that we're in a choppy market, there is still the very useful tool of all of the pivot points and also the high, low and close and DP from the previous day. In the DAX, we got a down day in the DAX, which is most unusual of late, as can be seen there. We've got a red bar and we're still below the 5-bar moving average on the overnight. Again, if we do exactly the same that we've just done with the Dow, and that's to go from here up to here and measure back the sort of pullback. So let's just have a quick look and get some idea on numbers. So there we can see sort of 15,683 would be the downside target of 89. It means you've got to take out the green line there, which is around the 62% retracement as well. So 15,750 would also be a support area for this market. In the 30-minute chart yesterday morning, we saw the market move sharply lower. We had a retest of the low down to the S3. I mentioned the S3 yesterday. saying that 90% plus of the time the market would come off this area or consolidate, and now we see it come off. Where does it go to? The previous day's low. That's become a resistance with the 50 EMA, and the market's then stuck in a sideways range overnight, waiting for those flash numbers. 5-minute chart of the DAX, there's your overnight. You can see the market bouncing off the close several times. The DP on the upside as a target if those numbers are favourable. It will be volatile at 8:15 onwards with the release of the numbers, particularly the German ones and then the European ones as a whole. Yesterday you can see the market selling off from the DP, cascade down. Then we got into a sideways move for most of the morning. We had the retest as the Dow moved lower at 130. You can see that down to the S3. You see them buying in at the S3. The market's over sold. We get an 89% retracement, and then the market makes its way back up to the low during the afternoon and early evening. But overnight, the market very quiet at the moment, waiting for those UK retail numbers out shortly. And in the S&P 500, second down day with demand though. That's the only difference for this market. 30-minute charts, again the electronic market moving lower. Then we get the official open in Chicago for the futures, and we see the market moving up to the DP and the close. We get through, but then immediately we're overbought, and also if you were to measure from there to there, you'll see that we're back at 100% as well. We've got that resistance over to the left where the market has then sold off from. But again, straight reversal off this immediately after. There was no low or anything there, but the Dow dictated that, didn't it, by doing that straight reversal, dragging this market back as well along with it. The moment, a bit of weakness in the S&P as the market is below the close and the DP level. But again, this is going to be inflationary news dependent today. FTSE 100 back to the upside yesterday, stuck in a sideways range, as can be seen there. Very tight range for this market. And currently still stuck at that 89% retracement that we've had drawn in on the chart for some time. Needs to close back above this, and also at the moment needs to close below the 5 bar if it's going to show any weakness. Again, UK retail sales may help, but at the moment this market is still very strong. Yesterday you can see the move to the downside. Where did the market stop? Stopped at the low, and then traded in a sideways range before breaking out to the upside. Where did it trade to? Previous day's high. That's a classic internal look at a sideways channel. And then we came back at 89%, and then the market's been sideways overnight and currently back around 78% retracement as well to the previous day's close. Got the 200 MA, 50 EMA, and the market currently sitting at this level. In the currencies, GBPJPY, despite the fact of breaking through on Wednesday, Thursday, the market failed to hold. As you see there, and overnight we're currently down. So choppy in this market as well, a bit of a reversal going on. So we had the previous day's move to the upside. We just drag this across. There you can see the high where we broke through on Wednesday. And then Thursday we got nowhere near the high, which is just above there. There's Wednesday's high. Market down, came back to the close, tried to hold above the close, and then you can see it was a struggle. The averages then switched. We broke through the DP. The DP then came a resistance, and then the market has made its way down, bouncing off the 20 bar moving average throughout the evening of yesterday. You can see how the 20 bar moving average there, and also once we drove through the 200 MA, we came through here. You can see the demand buying back. We hit the close, the 20 bar moving average. The next bar fails to break through the close, slam through the 200, and then we've continued down to the S2. If the market does continue lower, watch the S3 for support in this market. In the pound, 2 days of supply coming into the market. Market's being held above the 20 bar moving average at the moment. Needs to hold above this level. I would be inclined to draw in some fibs on the downside here. Again, in your own chart, to make this as big as you can, because it's well worth watching as the market unfolds to see where these levels are. And in the 30-minute pound, choppy yesterday. And once again, you can see the market moving higher with the opening of the Dow, but market failing to hold, as can be seen there. And at the moment, we're through the DP and the close as well. In the dollar, this up on the overnight, but very narrow range for the US dollar at the moment. Expect this to remain the same until we get to the 3rd of May, I think it is, when Powell will release the next rate increase. And of course, Bailey has the same problem now with inflation still being above 10%. So it looks like interest rates are headed for 5% in the UK as well. And in the metals, silver managing to hold, but it's starting to look a bit weakish here for me. It could just trade in a sideways range for the next few days. Again, waiting for that next rate increase from the Fed, but at the moment the market sideways and down a bit overnight, as can be seen here. But a choppy session for this market yesterday. And I think another reason for the choppiness at the moment is that there is so much indecision on whether the Fed are going to pivot, whether they're going to raise, etc. So it's interesting to see this. And also you do get this lull after Easter as you go into May. And then as soon as you get May out of the way, then it all tends to kick off again. That's generally the cycle. But yesterday, silver struggling with the DP and the close, as can be seen there. Watch the low down at 25.04 in this market. Meanwhile, gold doing a bit better. Stuck in a sideways range also, but a lot less volatile for yesterday's session. But down overnight as the dollar shows a bit of strength. And again, we're back below the $2,000 as well. They've just hammered it back below there. We managed to get back above that 2,000 psychological level yesterday, but overnight they've currently hammered the market down. A few thousand contracts there sold, whilst the market's official market is closed. On the electronic market, it's the easiest time to slam it, and that's exactly what we're seeing there, down $50 at the moment in the gold market. And finally, in the gold-silver ratio, this too stuck in a sideways range now as it heads back towards the 80 level there, but way off the highs of 92 that we saw recently. So holding up well at the moment. Okay, we're heading into the weekend. Let's see what the flash news does for the markets today. And with that, have a good one. And as ever, thanks for watching. See you in the next one.